So hello everyone, welcome to EduTap and welcome to today's session. So today is a mega revision session for all of you for the finance current affairs as the PFRDA Grade A examination is quite near. So there were many requests that were coming that we should take a revision session for the current affairs, as well as now there is the news that the RBI Grade B is going to come soon as the tender has been released. So soon the notification will be released. Okay. So for the RBI Grade B also the finance current affairs are very important for your phase 1, for your phase 2 also. Okay. So this session is going to be important for all of you. Give me a thumbs up if I am clearly audible and visible to all of you. And welcome to the session everyone. Okay, so let's start with the revision session. This is going to be our mega revision session for all the finance current affairs from the July 2025. So the most important current affairs, the finance current affairs, they have been picked. And if you have gone through the CurrentTap magazine, you will see that most of the news articles that is in the CurrentTap GA plus finance section that is covered in today's session through the MCQs. So let's see how much you are prepared. Okay, so let's get started. Okay. Everything's fine. Good morning everyone. Let's get started. I hope you are excited and you are prepared for today's session. Okay, so let's get started. Now this session is again important for all of you, for PFRDA Grade A, for RBI Grade B. Now before starting with the session, there is a big announcement that there is a massive prize draw for the limited time only. So the students that are thinking of preparing for the RBI Grade B or that have started their preparation for the RBI Grade B or the other regulatory body examination, but now they want to purchase the course, they want to do the systematic preparation through the systematic material and they are seeing the EduTap's courses. So this is the best time to purchase the course as there is flat 74% that is going on. Okay. So there is flat 74% off that is going on, and this is for the regulatory body courses as well as for the combo courses. If you want to get the combo courses, okay, you can use the code August74 for getting the flat 74% off, and this offer is valid till tomorrow only. So this offer is valid till 31st August 2025. Okay, so now I hope if you want to buy the course, you will buy the course in this time period because this is the best offer that is going on right now, and if you want to have the systematic course, this is the best time. Okay, so now let's get started with the first question. It is going to be like there are a lot of questions, so let's be a little fast also. Okay, so first of all the question is, what is the name of the 100-day national campaign launched by the Investor Education and Protection Fund Authority under the Ministry of Corporate Affairs, which is aimed at creating awareness about unclaimed dividends and guiding shareholders on KYC and nomination updates. So which of the following is correct? I am getting the answer D. Okay. What about the others? So yes, D is the right answer, that is Saksham Niveshak. This is the 100-day national campaign that has been launched by the IEPFA, and the main aim to launch this campaign is to create awareness about the unclaimed dividends and guiding shareholders to update their KYC as well as to have the nomination. Okay, they have to nominate their relatives now that something happens to them, then the money will go or the shares will go to whom. Okay, so here the answer is D, Saksham Niveshak. Okay, so this is from the PIB, and as you know that PIB is very important for the current affairs and direct questions come from the PIB in your RBI Grade B as well as in the PFRDA Grade A also. The IPFA has launched the 100-day campaign, that is Saksham Niveshak. It is empowering the shareholders by creating awareness about unclaimed dividends and in regards to their KYC and nomination details. Now coming to the next question, try to answer this question. Which initiative launched in May 2025 by the DOT's Department of Telecommunication Digital Intelligence Unit classifies mobile number as medium, high or very high risk of financial fraud based on inputs from platforms like National Cybercrime Reporting Portal, Chakshu, and banks or financial institutions? So which initiative has been launched? Try to answer this question. So the name of the initiative is, yes, Financial Fraud Risk Indicator. This is the initiative that has been launched by the Department of Telecommunications, that has launched this initiative of Financial Fraud Risk Indicator, in which the mobile numbers are divided into medium, high, very high risk, and this information is provided to the regulated entities of the Reserve Bank of India or the financial institutions. Okay, so this is the basic idea. So Department of Telecommunication has developed the FRI, that is Financial Fraud Risk Indicator, to classify mobile numbers, as well as it is available to all the stakeholders. The information will be available to the banks, NBFCs, UPI service providers and such. So this is the idea. Now coming to the next news article, gross non-performing asset of public sector banks have been steadily declining in recent years. By how much did the NPAs reduce between March 2021 and March 2025? So it has reduced from 12.45% to 5.12% or 9.11% to 2.58%. So what is the answer here? Yes, you can watch the session, Kanishka, because here I am providing you the brief understanding also, okay? So basically the non-performing assets have reduced from March 2021 till March 2025, and the NPAs have reduced from 9.11% to 2.58%. So you can understand that the non-performing assets have reduced for the public sector banks, and this is a good news. This is a good news. So here first of all the answer is B, and the reduction in NPAs have come because of various steps that have been taken by the government, by the Reserve Bank of India, okay? So change in credit culture has been affected with the Insolvency and Bankruptcy Code, as well as the SARFAESI Act, that is Securitization and Reconstruction of Financial Assets and Enforcement of Security Asset Act of 2002, and Recovery of Debt and Bankruptcy Act have been amended to make it more effective, okay? So here you can see that there have been different steps that have been taken by the government and the RBI to recover and to reduce the NPAs, and to recover the NPAs, okay? The Debt Recovery Tribunal, its jurisdiction was increased from rupees 10 lakhs to rupees 20 lakhs, so that the Debt Recovery Tribunal can focus on the big loans and such. So this is the basic idea, and here you can see that from the 9.11%, the gross NPAs have reduced to 2.58%. So this is good news for the banks, for the public sector banks. Now coming to the next news article, which initiative announced in the Union Budget of 2024-25 and formally launched by the Union Finance Minister aims to enable public sector banks to assess the MSME's creditworthiness based on their digital footprints instead of relying on external assessment. So basically it is said that the public sector banks internally should see the creditworthiness of the MSMEs through the data that is provided to the PSBs, to the public sector banks, instead of using the external assessment. So which initiative is it? Which initiative is it? Yes, very good. It is new digital credit assessment model, okay? So D is the right answer here. Here you can see that the new digital credit assessment model for MSMEs was announced, and this model, it says that the public sector bank should build in-house capability to assess the MSME's creditworthiness instead of relying on the external assessment, okay? So this is the idea. Now coming to the next one, that is the key provisions of the Banking Laws Amendment Act 2025 came into effect from 1st August 2025. The Banking Law Amendment Act 2025 was notified on 15th April 2025. Now which of the following statement is or are correct in regards to the Banking Law Amendment Act 2025? That you have to answer. So what is the answer here? So you have to tell that which of the following statement is or are correct, okay? Correct statement. So Banking Regulation Act prohibits the director of a bank except its chairman or whole-time director to hold office for more than 8 years consecutively, correct? And 10 years in case of cooperative bank. So it is not 12, it is 10 years for the cooperative banks, okay? It has been decided to redefine the threshold of substantial interest that a person has or an entity has substantial interest, substantial shareholding in a bank when they have around 2 crore of the shares, 2 crore value of the shares, okay, instead of 5 lakh. So yes, this value has been increased from 5 lakh to 2 crore. So this is correct. Next is, as per the amendment to the State Bank of India Act of 1955, the auditors shall receive such remuneration as decided by the State Bank of India. So before, the Reserve Bank of India used to decide the remuneration for the auditors for the State Bank of India, okay, or for the banks. Now it has been decided that the banks themselves can decide the remuneration for the auditors, okay. So here the second and third statements are correct, and that's why the answer is B here. The answer is B here, okay. So this is the idea. Now it was in PIB recently, and here you can see the important data points were given that the substantial interest limit has been increased from 5 lakh to 2 crore, as well as the maximum tenure the directors can be 8 years. This has been increased to 10 years for the cooperative banks, okay, but for the other banks it is 8 years only. So here I have taken a session also, as well as it is provided in your CurrentTap magazine also, that substantial interest value has been increased from 5 lakh to 2 crore, as well as tenure of directors for cooperative bank has been increased to 10 years, as well as settlement of unclaimed amounts. So 7 consecutive, if the dividend is unclaimed, or the shares are unclaimed, or the interest is unclaimed, or the bond amount is unclaimed for 7 consecutive years, then it has to be transferred to the Investor Education and Protection Fund. That is the idea, okay. So this is the major idea. Next is defined fortnight for cash reserves. It has been decided to define the fortnight for cash reserves from 1st to 15th day of each month, or from 16th to the last day of each month. So this is the basic idea, okay. Prohibition on common directors in cooperative bank. So this is the idea. There is the prohibition on common director in cooperative bank. That means if a director is the director of a bank, it cannot become the director of any other bank. But it has been said that a director of a central cooperative bank can become the director of the state cooperative bank also. So allowing directors of central cooperative bank to serve on the boards of state cooperative bank where they are members. So if a director is the director in the central cooperative bank, and the director is also a member of the state cooperative bank, then the director can become the part of the state cooperative bank, or the director of the state cooperative bank, okay. This is the basic idea. So I hope this is very much clear. Now coming to the next question. So RBI has been publishing a composite Reserve Bank of India digital payment index since January 1, 2021 to capture the extent of digitization. So try to answer this question, that which of the following statement is or are correct in regards to digital payment index, okay. So try to answer this. So Reserve Bank of India has been publishing a composite Reserve Bank of India digital payment index since January 2021 to capture the extent of digitization of payments across the country. So which of the following statements are correct in regards to RBI DPI? So first of all, RBI DPI has been constructed with March 2018 as the base period. That is, DPI score for March 2018 is set at 100, okay. DPI for March 2025 stands at 493.22. So this is correct, as against 465. So current DPI value for March 2025 is 493.22. Now the increase in RBI DPI index was driven by significant growth in parameters, that is payment infrastructure, supply side factors, and payment performance. So this is wrong. That's why the answer here is, what is the answer here? Yes, very good. Correct. So Abhigyan and Guru Raja has given the right answer. That is, your first and second statement are correct. That's why the answer is C here. Okay, that's why the answer is C. Now coming to the next question, that is RBI Digital Payment Index for March 2025. So this we have discussed about this question. We have discussed about that the RBI DPI value has been increased from 465.33 to 493.22. Okay, so the value has increased, and the value has increased mainly because of the payment performance as well as payment infrastructure supply side. This is the idea, okay. And the digital payment index, it is released on the half yearly basis, and the digital payment index shows the penetration of digital payments in the country. So now coming to the next question, which Indian state recently became the third to cross the milestone of 1 crore registered stock market investors according to the National Stock Exchange, joining Maharashtra and Uttar Pradesh in this achievement? So which of the following Indian state has recently become the third to cross the milestone of 1 crore registered stock market investors? So it is, which state is it? Is it Tamil Nadu, Kerala, Karnataka, Madhya Pradesh, or Gujarat? It is Gujarat. Okay, very good. So Gujarat is the one that has crossed 1 crore investors registration on the NSE. This is the idea, okay. Next is, in July 2025, SEBI barred which US-based proprietary trading firm from accessing the Indian securities market and impounded about 4,843 crore, citing unlawful gains through expiry day index manipulation. So recently this company was quite in news, or this trading firm was quite in news. So which trading firm is it? It is Jane Street. So this is the answer. Yes, very good. So Jane Street is the right answer here. Jane Street has been barred. This is a US based quant trading firm, Jane Street, that has been barred from entering or from assessing the Indian securities market. Okay. Next is VCF, that is Venture Capital Fund Settlement Scheme 2025, has been provided by the SEBI for the settlement opportunity to the venture capital funds. Basically, venture capital funds, they were following prior guidelines that were released in 1900s, and then in 2012, the alternative investment funds guidelines were released. Okay, so it was said that the venture capital funds have to follow the new guidelines, and the venture capital funds that do not want to follow the new guidelines, they have to close down basically. So now there are some venture capital funds that have transmigrated, or they have transferred to the new directions, or they have started following the new directions, but their certain schemes that these venture capital funds have, they have expired, but the money has not been returned to the investors. So it has happened that certain schemes of the venture capital funds have been expired, but the venture capital funds have not returned the money to the investors. So this is not right, because if the scheme, or if the money that was collected from the investors, so the scheme has been expired, so the money has to be returned to the investors. So if the money has not been provided to the investors, so the SEBI is saying that we are providing you the settlement opportunity, return the money to the investors and pay a fine, and we will not take stringent action against you. Okay, so basically venture capital funds that have transferred to the new directions of the alternative investment funds 2012. So these venture capital funds, if they have not completed their scheme, or let's say their scheme maturity has been finished, but they have not returned the money to the investors, so they can return the money to the investors now. And after returning the money to the investors, they have to pay a penalty to the SEBI also, because they didn't pay the money to the investors in the right time, and even after the maturity they didn't pay to the investors. So now they have to pay a penalty to the SEBI. If they do not pay the penalty, then the SEBI can take more stringent action against the venture capital fund. Okay, so which of the following statement is or are correct in this regards? So VCFs with at least one scheme whose tenure has expired but not wound up. That means you can understand that the scheme has expired, the tenure has finished, the tenure has matured, but the investors have not been given the complete money and has completed, and the VCF is under the new directions. So the VCF that is under the new directions, and the VCF at least has one scheme whose tenure has expired but not wound up. That means they have not returned the money to the investors. They can come under this settlement opportunity under this VCF settlement scheme. Okay, an entity desirous of making an application for availing the settlement under the scheme is advised to submit a settlement application to the SEBI along with a non-refundable application fee of 25,000 with applicable GST of 18%. That means if the VCFs want to settle their penalty, they have to pay 25,000 for the application fee as well as 18% of GST. The base amount for settlement for delay up to 1 year. If the delay has happened up to 1 year in winding up the scheme, then the penalty will be 1 lakh rupees. For every subsequent year of delay, the penalty, additional amount of penalty will be 50,000 rupees. So this is wrong. That's why the answer is 1 and 2 is correct. That's why the answer is B. Okay, so here basically the VCF settlement scheme, it is for the venture capital funds that have transferred to the new directions, that is the alternative investment fund directions. And these VCFs, if they have at least one scheme whose tenure has expired but they have not returned the money to the investors, first they have to return the money to the investors and then they have to pay the penalty. If they do not pay the penalty, they will have to face stringent actions from the SEBI. Okay, so the SEBI will take strong actions against these VCFs because they delayed their payment to the investors. Okay, so this is the basic idea. Now coming to the next question, that the BSE, that is the Bombay Stock Exchange, through its wholly owned subsidiary Asia Index Private Limited, has unveiled a new sectoral benchmark, the BSE Insurance Index, offering investors and fund managers a focused tool to track the performance of the India's listed insurance companies. So there is the BSE insurance index that has been launched that will show the performance of the top insurance companies in the country. Okay, which of the following statements are correct in this regards? So first of all, the index is launched with a base value of 1000, not 100. Okay, the index is backdated to start from 18 June 2018. The index is said to be reconstituted semi-annually in June and December, mirroring global best practices in index maintenance. That is correct. So here the correct statement is only 3. So here the answer should be E. Okay. So BSE Insurance Index, this is launched recently by the Asia Index Private Limited, and the BSE Insurance Index, it is based on the BSE 1000 index. So BSE 1000 index, it shows the 1000 biggest companies in the stock market. Okay, so the 1000 biggest companies in terms of their market capitalization or market value of their shares, with their market value of their shares as well as the shares that are present in the market. So BSE 1000 index, it shows the 1000 biggest companies in the Bombay Stock Exchange, the 1000 biggest companies in terms of their market capitalization, market value. Okay, now out of this 1000 biggest companies in terms of their market capitalization, the insurance companies, they are taken under the BSE Insurance Index. So BSE Insurance Index, it basically derives its constituents, or BSE Insurance Index, it derives the companies from the BSE 1000 index. So this is the idea. The base value of the BSE Insurance Index is 1000 and the index is backdated from 18 June 2018. Okay. Now currently the BSE 1000 BSE Insurance Index, it consists of 12 insurance companies, and it is said that no individual company should have the stock weight of more than 25%. Okay, this is the basic idea. So launch date is 10th July 2025. The first value date is 18 June 2018. The base value for the insurance index, for the BSE Insurance Index, is 1000. Okay, number of constituents in the BSE Insurance Index is 12. Reconstitution frequency is semi-annually, June and December. So the BSE Insurance Index will be reconstituted semi-annually in June and December. This is the idea. Okay, the highest weight is given to SDFC Life Insurance Co Limited, that is 25%, we can say. Okay, now coming to the next question. So SEBI introduced amendments in 2024 to bring small and medium real estate investment trust under regulation with asset values ranging from 50 crore to 500 crore. Under this framework, which company became the first public listed company in India to receive SEBI's registration certificate for launching an SM REIT? Try to answer this question. So basically, the SEBI introduced that we are bringing the small and medium real estate investment trust. So real estate investment trust, they pull in the money, they collect the money from the investors, and then they invest this money in the real estate, So now there is small and medium real estate investment trust, so that the small investors and such can also invest in the real estate investment trust. Okay, now which company has become the first public listed company in India to receive the SEBI's registration certificate for launching the small and medium real estate investment trust? So the answer here is very good, Aurum PropTech. This is the answer. Okay, so Aurum PropTech has become the first public listed company in India to receive SEBI's registration certificate for launching small and medium real estate investment trust. Now small and medium real estate investment trust should have the asset size of minimum 50 crores to maximum 500 crores, as well as the at least 200 investors should be there in the small and medium real estate investment trust. There should be at least 200 investors. Asset value should be between 50 crore and 500 crore, as well as investment manager who can become the investor manager for the small and medium real estate investment trust. So investment manager applying for small and medium real estate investment trust should have the net worth of at least 20 crores and at least for 2 years of experience should be there. Okay, so at least 2 years of experience in real estate or real estate fund management. Now coming to this, as well as per minimum subscription amount per investor should be 10 lakh. That means there should be 200 investors, minimum of 200 investors. This is minimum. Or 200 investors should be there in small and medium real estate investment trust, as well as 10 lakh per investor. 10 lakh per investor. Okay, should be invested minimum. Try to answer this question now. So to promote ease of doing business and simplify compliance reporting for stockbrokers with multiple stock exchanges. So see, Zerodha, Grow, IND Money, they are the stockbrokers that might be allowing the investors to trade in the National Stock Exchange, Bombay Stock Exchange. Okay, so the stockbrokers, they have to provide the compliance reports to multiple stock exchanges. Now it has been said that to make it easier for the stock exchange, for the stockbrokers to provide the compliance report to the stock exchanges, now there is a platform that has been developed because there are multiple stock exchanges that are present. Okay, so what is that platform? Yes, Samuhik Prativedan Manch. So Samuhik Prativedan Manch, this is the platform for the stockbrokers through which the stockbrokers can provide their compliance reports to multiple stock exchanges. So stockbrokers can provide their compliance report to the multiple stock exchanges at a time. Okay, this is the idea. So towards this end, SEBI and stock exchanges have now introduced a technology-based common reporting mechanism, that is Samuhik Prativedan Manch, offered by National Stock Exchange to stockbrokers. Through this Samuhik Prativedan Manch, the stockbrokers can submit their compliance report to all the exchanges at a time. So they can submit their compliance reports at all the exchanges through this Samuhik Prativedan Manch. Okay, now coming to the next question, the SEBI and exchanges and the stock exchanges and such, they have revised the enhanced surveillance mechanism framework for companies with market capitalization lower than dash. So market capitalization basically means the market value of the shares multiplied by the number of shares. Okay, so market capitalization is this. So usually the top companies with the market capitalization, like they come in the BSE 1000 index and such. Now see, it has been said that there are certain companies that come under the enhanced surveillance mechanism. Okay, because there are certain companies whose shares, they are showing irregular activities. Okay, so certain companies' shares, they come under the enhanced surveillance mechanism. Now it has been said that the SEBI and the exchanges, they have revised the enhanced surveillance mechanism for the companies with market capitalization lower than 1000 crore. Very good, lower than 1000 crore, and the new framework is going to be applicable from July 28. So the answer here is C. And basically, see, now it has been said that under the enhanced surveillance mechanism, there will be two stages. Stage 1 will include the companies showing a steady rise in share prices over the last 3 months. This may, so basically the companies that are showing a steady rise in share prices over the last 3 months, they will be added in stage 1, or they can be added in stage 1, because it is showing that there is increased investor interest here. So there might be speculative activities that might be happening. Okay, now from stage 1, the companies or the shares will be transferred to stage 2 if the price to earning ratio of up to 2 times to price to earning ratio of the benchmark index Nifty 500. That means benchmark index is Nifty 500. So Nifty 500 basically includes 500 biggest companies' shares, okay, on the basis of market capitalization. So Nifty 500 index has a P, that is price to earning ratio. If the price to earning ratio of a company is up to 2 times the price to earning ratio of the Nifty 500 index, that means the price to earning ratio of certain companies is too high, then the companies can be transferred, the shares can be transferred from stage 1 to stage 2. So basically the companies shares, the companies whose shares are traded in the exchanges, and let's say the company will come in the stage 1 if the company is showing a steady rise in share prices over the last 3 months. This is because of speculative activities. It can be because of speculative activities and such. Okay, now the companies will be transferred from stage 1 to stage 2 if the PE ratio of these companies is up to 2 times the PE ratio of the Nifty 500 index. Okay, so that means the Nifty as compared to Nifty 500 index, the PE ratio of these companies is too high. Okay, if the company is in stage 1, then it must keep 100% margin from the T+2 day. That is from the 2 days after the trade, or from the 2 days after the company has come into stage 1 or so. So from then day onwards, 100% margin means 100% upfront payment should happen when you want to buy the shares. So usually margin is taken, but in this case it is said that 100% of payment should happen upfront. This is the basic idea. Okay, and the shares will be traded with a 5% price band. That means the share value can decrease up to 5% only or can increase up to 5% only, not more than that for a certain time period. So this is the basic idea regarding the enhanced surveillance mechanism, in which two stages are there. First stage is regarding price rise. The second stage is regarding the PE ratio. That can be two, like if it is 2 times of the Nifty 500 PE ratio, then the companies will move from stage 1 to stage 2. Okay, in the stage 1, if the companies are in stage 1, there should be 100% margin that should be taken for the trade in the shares. This is the idea. Now coming to the next question. So SEBI having considered SEBI having considered the application for grant of renewal of recognition of Multi-Commodity Exchange Clearing Corporation Limited. So it has been said that for the MCECC, that is for the Multi-Commodity Exchange Clearing Corporation Limited, there is renewal of recognition that will happen for how many years? Like the renewal of recognition is happening for how many years, that you have to tell me. And this renewal of recognition is starting from 31st day of July 2025, and this will continue till 31st day of July 2028. That means the recognition is renewed for 3 years. So here the right answer is B. Very good everyone. So the right answer is B, and the MCXCCL, that is your Multi-Commodity Exchange Clearing Corporation Limited. So Multi-Commodity Exchange Clearing Corporation Limited, MCXCCL, recognition has been increased or has been renewed for 3 years. So this is the basic idea. Basically the renewal of recognition has happened for 3 years, commencing from 31st day of July 2025 till 30th day of July 2028. So it is 30th day of July 2028. This is the basic idea. Now the clearing corporations, so Indian Clearing Corporation is there, Multi-Commodity Exchange Clearing Corporation is there, that is valid up to 2028. National Commodity Clearing Limited is valid up to September 9, 2025. NSE Clearing Limited is valid up to 2026. AMC Repo Clearing Limited is valid up to 2026. So basically the highest or the largest validity is for the MCXCCL only. Okay. Next is, which payment bank was recently included by Reserve Bank of India in the second schedule of the RBI Act of 1934, thereby gaining the status of a scheduled bank and eligibility of access facilities such as MSF. So basically, which payment bank has recently got the second schedule status? It was quite in news also, and recently I think the IPO was also launched. Yes, it is NSDL Payments Bank. Okay, so NSDL Payment Bank, it has got the status of second schedule. Okay, so NSDL Payment Bank has come into the second schedule, so it has become a scheduled bank. So all the banks that come under the second schedule, they become the scheduled bank. Okay. Next is, RBI has released the Reserve Bank of India prepayment charges on loans directions 2025, which shall be applicable to all the loans and advances. So basically the prepayment charges on loans, these directions were released by the Reserve Bank of India. Now which of the following statement is or are correct in regards to the directions? So first of all, these directions shall apply to all the commercial banks, correct, excluding the payment bank, correct, because payment bank, they cannot give the loans. So prepayment charges on loans, they are it is not valid for them. Okay, so they cannot give the loans. Cooperative banks, NBFCs, all India financial institutions, so these directions apply to all these institutions. Okay, a small finance bank, a regional rural bank, a tier 3 primary urban cooperative bank, state cooperative bank, central cooperative bank, NBFC middle layer, they shall not levy any prepayment charges for the loans that is given for the business purpose to the individuals and micro and small enterprises if the loan amount is up to the limit of 50 lakh. If the loan amount is up to the limit of 50 lakh, there should be no prepayment charges. This is the idea. Okay. For all the floating rate loans granted for purposes other than business to individuals. So for all the floating rate loans, that is given for purposes other than business to individuals, so in this case, there should be no prepayment charges. Okay. So here the first statement is correct and the third statement is also correct. The second statement is wrong, and that's why the answer is C here, 1 and 3. Okay. So prepayment charges, basically it says that for all the floating rate loans, there should be no prepayment charges if the loan is given for purposes other than business to the individuals, and there should be no prepayment charges for the loans that is given for business purpose to individuals and micro and small enterprises. If the loan is given by commercial bank, excluding these bank, Tier 4 primary urban cooperative banks, so there should be no prepayment charges for the loans that is given for business purposes to individuals and micro and small enterprises if the loan is given by commercial bank, excluding these banks. A Tier 4 primary urban cooperative bank, NBFC upper layer, and all India financial institution, they cannot levy any prepayment charges. Okay. But if the loan is given for the business purpose to the individuals or micro and small enterprises by the small finance banks, regional rural bank, Tier 3 primary urban cooperative bank, state cooperative bank, central cooperative bank, and the NBFC middle layer, they shall not levy the prepayment charges for the loans granted up to the limit of 50 lakh. This is the idea. Okay. Next question, central government departments and ministries will be required to process all payments above dash crores from July 16, including to private entities or to private parties to the private vendors through the Reserve Bank of India's e-Kuber system, that is the core banking system of the Reserve Bank of India, according to the directive sent out by the Department of Expenditure. What is the answer here? The answer here is very good, 75 crore. Okay. So basically it is said that the central government departments and ministries, they have to pay through the India's e-Kuber system, Reserve Bank of India's e-Kuber system. Okay, so this is the basic idea. Now there is some problem in the PPT because the PPT I made, it was like clear and there was no overlapping that was happening. So when you will get the PPT, it will be the corrected PPT, because I think due to the screen, due to the small screen, there is like overlapping that is happening. Okay, so this you will not get in the final PPT, that you will get in the PDF form. So the final PPT that you will get in the Telegram channel, that will be fine. Okay, this will not happen in that. It is because of the PC, I guess, that this is happening. So RBI has released Reserve Bank of India lending against gold and silver collateral directions 2025. Which of the following statement is incorrect in regards to the directions? So basically the Reserve Bank of India released the lending against gold and silver collateral. So see, you can give gold and silver as collateral and you can take loan against your gold and silver. Okay, you can keep gold and silver girvi. Okay, you can keep the gold and silver as collateral and you can take loan against it. Now the directions has been released by the Reserve Bank of India in this regards. So which of the following statement is incorrect in regards to this? So tenure of consumption loans in the nature of bullet repayment loans shall be capped at 12 months. Correct. So if you are taking the loan for the consumption purposes and this is a bullet repayment loan, that means the repayment will happen one time only. That means there is no EMIs that you have to pay every month in terms of like you are paying the principal payment every month. No, only bullet repayment will happen, that at the end of the tenure you have to pay once. Okay. Loans against ornaments shall be subject to the aggregate weight of ornaments pledged for all loans to a borrower shall not exceed 1 kilogram. That means if you are taking loan against gold ornaments, the gold ornament is the collateral. So aggregate weight of the ornament pledged should not exceed 1 kilogram of gold ornaments, and in case of silver ornaments it should not exceed 10 kilograms of silver ornaments. Okay, so this is the idea. Next is detailed credit assessment including assessment of borrowers repayment capacity shall be undertaken in case the total loan amount against eligible collateral is above 2.5 lakh to a borrower. That means if the loan is given to a borrower that is exceeding the limit of 2.5 lakh, in this case there should be a detailed credit assessment that should happen. Okay, so the limit here is rupees 2.5 lakh. So if the loan is given that is above this amount, okay, then there should be a detailed credit assessment that should happen. So this is wrong. Here it should be 2.5 lakh. Next is gold or silver accepted as collateral shall be valued based on the lower of the average closing price for gold or silver of that specific purity over the preceding 30 days. So yes, it the gold or silver accepted as collateral. So the gold value is being determined or the silver value is being determined on the basis of the average closing price for gold or silver of that specific purity over the preceding 30 days, or the closing price for gold or silver of that specific purity on the preceding day as published either by the Indian Bullion and Jeweller Association Limited or the commodity exchange regulated by the SEBI. Okay, lender shall release the money, like let's say the full repayment of loan has happened, so the gold or silver collateral has to be returned within 7 days, within maximum 7 working days. Okay, so this is the idea. So C statement was wrong. So basically the RBI has released the directions, the Reserve Bank of India has released the directions for the gold and silver collateral. Okay, and these directions are applicable on all the commercial banks, small finance bank, local area bank, regional bank, excluding the payment bank. Okay, and the urban cooperative banks and all India financial institution, NBFCs and such also. All non-banking financial companies, including the housing finance companies also. Okay, now the details are laid down here that you can read, and here loan against ornaments and coins have some limit. Okay, on the collateral that can be taken for the loan. So the limit is 1 kilogram of the gold ornament and 10 kilogram of silver ornament. In case of coins, it is 50 grams in case of gold coins and 500 grams in case of silver coins. This is the idea. Okay, so this is all. Now maximum loan to value ratio. Loan to value ratio means loan against the collateral value. So maximum loan to value ratio in respect of consumption loans against the eligible collateral shall not exceed the LTVs that is given here. So if the consumption loan is of less than or equal to 2.5 lakh, the LTV ratio should be 85%. So let's say collateral value is 100, the loan that can be given is 85 rupees. This is the basic idea. So against the collateral value, how much loan can be given? So that is LTV ratio. Okay, that is loan to value ratio against the collateral value of 100. Let's say your gold value is of 100 rupees, so loan can be given 85. This is the idea. Okay, now coming to the why this we are discussing, though this direction was released in May or June, but we are discussing this because recently in July it was discussed that there are certain loans for which you do not have to provide the collateral. So these are the collateral free loans. Okay, so in the agricultural loans, there is the collateral free agricultural loans up to the limit of 2 lakh where no collateral has to be given by the farmers. But still, let's say a farmer want to give the collateral as gold or silver. Okay, so why do you want to give the collateral when the collateral is not being asked? Because you want to give the collateral. When you give the collateral, there is lesser interest rate that will be charged or easier terms and conditions that will be taken. Okay, so let's say the farmer wants to give the collateral, so voluntary pledge of gold and silver or voluntary pledge of collateral can happen by the borrowers. This is allowed by the borrowers, and if they are doing the voluntary pledge of gold and silver, they will get easier norms, they will get easier terms and condition or lesser interest rate and such. Okay, this is the idea. So voluntary pledge of gold and silver as collateral can happen for the collateral free agricultural loans and collateral free micro and small enterprises loans. So banks are mandated not to accept collateral security in case of loans up to 10 lakh extended to units in the micro and small enterprises. But now it has been said that if the micro and small enterprises voluntarily want to pledge their collateral, they can pledge their collateral and they can get easier terms and condition and lesser interest rate. Okay, coming to the next question, try to answer this. RBI has recently, I'm having like tonsils right now, so I'm not able to speak very clearly, but I hope you are getting the basic point. Okay, so now try to answer this question. RBI has recently released Reserve Bank of India Investment in Alternative Investment Fund Directions 2025, which shall come into force from January 1, 2026. Basically, RBI has released the directions that there can be the investment that can happen in the alternative investment fund. Okay, so the banks, the NBFCs, the units that are regulated by the Reserve Bank of India, they can invest in the alternative investment fund. Okay, they can invest in the alternative investment fund, but there are certain restrictions. No regulated entity of the Reserve Bank of India shall individually contribute more than 10% of the corpus of the alternative investment fund, as well as collective contribution by all the regulated entities in any alternative investment fund shall not be more than 20% of the corpus of that scheme. Okay, so here the right answer is B. So basically, no regulated entity shall individually contribute more than 10%. Collectively, the regulated entity should not contribute more than 20% in the AIF scheme. As well as, if a regulated entity is contributing more than 5% to the corpus of alternative investment fund, and this investment that regulated entity is doing in the alternative investment fund, this further invested in the debtor company through the debt instrument. So this will be considered downstream investment, okay? Downstream investment, because the regulated entity had given the debt to this debtor company, and now the regulated entity invested in the alternative investment fund that further invested in this debtor company through the debt instrument. So further debt is given to this debtor company. So this is downstream investment. And in this case, if the contribution by the regulated entity to the alternative investment fund and indirectly to the debtor company is more than 5%, that means downstream investment is more than 5%, so 100% of provisions have to be kept in regards to how much downstream investment has happened. This is the idea, okay? Next is, which country recently became the first Caribbean nation and the 8th country globally to adopt India's unified payment interface enabling Bhim app transactions? So try to answer this. Yes, it is Trinidad and Tobago. It has become the first Caribbean nation to be a part of to adopt the India's UPI. Okay, so this is the answer. E is the answer here. So Trinidad and Tobago has become the first Caribbean nation to adopt India's UPI. France was the first European country to adopt the India's UPI. Okay, this is the idea. And Trinidad and Tobago has become the 8th country globally to enable UPI based transactions. Now, next is, according to NPCI data, which app retained the top spot on the UPI leaderboard with a 46.46% market share? So, which app retained the top spot on the UPI leaderboard? It is PhonePe. Okay, so PhonePe is the one. So PhonePe retained the top spot on the UPI leaderboard with a huge market share according to the data released by the NPCI. After this, the Google Pay has a huge share in the UPI. After that, Paytm, Navi, Superdot Money and such. Now, which cross-border remittance system jointly developed by the Reserve Bank of India and the Monetary Authority of Singapore recently expanded to include 13 more Indian banks, taking the total to 19 banks for inward remittances, to come in? So, which cross-border remittance system has been jointly developed by RBI and Monetary Authority of Singapore? So, RBI has the Unified Payment Interface. The Monetary Authority of Singapore has PayNow. So, they both have been connected for the cross-border remittance system. So, UPI PayNow. D is the answer, okay? So next is, which cross-border payment startup recently secured the Reserve Bank of India's in-principle approval for a payment aggregator cross-border license, enabling it to facilitate the pay-ins and the payouts for the digital services, e-commerce and B2B trade? So which cross-border payment startup has recently secured this kind of in-principle approval? Which is the one? It is EximPay. Okay, the answer is EximPay here. So EximPay is the one that has received in principle approval from the Reserve Bank of India for the cross-border payments for the e-commerce platforms, as well as for the digital services, for the B2B trade and such. So it is EximPay. Next is, the IRDAI appointed panel led by Dinesh Khara submitted a report warning against allowing mergers between insurers and non-insurance firms. What is one of the key proposals the panel is also working on as part of broader reforms in the insurance sector? Read the statements very, very carefully and try to answer this question. Allowing 100% FDI in insurance firms with cross-border premium payments, introducing government-owned insurance companies in India, we already have it. Allowing 100% FDI in insurance firms that retain the entire premium within India. So actually C is the right answer. So one of the key proposal is that 100% FDI should be allowed in the insurance firms if those firms retain the entire premium in India. So whatever premium is collected by the firm is retained in India is used in India only. So C is the right answer here. Yes, very good. So IRDA appointed panel led by Dinesh Khara, and it has been said that the panel is also drafting a framework for implementing broader reforms in the insurance sector. One of the most important reform is that 100% of FDI should be allowed in insurance firms that retain the entire premium within India. Now, these are the questions. There are 2 more news articles that were given in CurrentTap magazine. Though they were just basic understanding you needed to have that. First of all, SEBI has said that if there is, let's say, the investor KYC is done by an intermediary or by a securities market entity, okay, by a securities market entity, then this same KYC can be used by the other intermediaries also. They do not have to do the KYC again and again. So basically SEBI reaffirmed KYC portability, that KYC can be portable from one intermediary to the other intermediary. If one intermediary has done the KYC for the same investor is not required again and again. So there is KYC portability across the securities market intermediaries. Set in an example for the other regulator also. So SEBI right now has 5 KYC registration agencies, and it has been said that KYC portability has to be done so that once the securities market intermediary is doing the KYC, that KYC can be shared with the other intermediaries also that do not need to do the KYC again and again. This is the idea. Okay. Now next is that GSW Energy has been included in the FTSE 4 Good Index series for its strong performance on the environmental, social and governance practices and sustainability. So this is the basic idea. So this is it. We have done 24 questions. You have to tell me that out of 24 how much marks you have gained. Okay. And the PPT for the PDF for the PPT you will get in the Telegram channel. Okay. Now again, this is the massive price drop that you can avail if you want to buy the courses, if you want to buy the regulatory body courses or if you want to buy the combo courses also. There is flat 74% off that is going on. You can use the code August74 and this is valid till 31st August 2025 only. Okay. So I hope if you want to buy the course, if you want to have the systematic material, this is the best time for you to have the course. Okay. And you will get the PDF of the PPT in the Telegram channel, and you can avail the PDF. You can get the PDF through the Telegram channel. So this is it. I hope you enjoyed the session. I hope you got the most of the points. If there is any confusion, you can tell me in the comment section below. And sorry, my throat is not well. So it I was having trouble speaking very much. So but I hope you have got the most of the points, and if still there is any confusion, do comment down below. In the next session on Tuesday, I'm thinking of taking the August revision session. So do tell me that do you want the August revision session or now we have done the July. Okay, the June one has already been done. Okay, the June one has already been done previously in the monthly revision session. Okay, of the CurrentTap magazine. So the July I have done today. August I'm thinking of doing on Tuesday, or do you want to have it on Thursday? Just tell me, okay, which day is preferable for you, because the PFRDA examination is also near. So I was thinking of doing it on Tuesday, but if you want it on Thursday, that we can also do. Okay, on Tuesday we can take some news article and such. Okay, so this is it. Thank you everyone. Thank you for joining. Balabi, sorry. What do you want to know? Okay, then do tell me in the comment section below that you want me to take a regular session on Tuesday, or do you want me to take the revision session for August on Tuesday. So it depends on you. What do you want? Okay. And thank you everyone. Thank you for joining. If you have any confusion, you can comment down below. Thank you everyone.